Good morning, everyone. We hope you had a nice weekend. My name is Jeremy Kronemeyer. I'm filling in for Stacy Scott for this week's weekly wrap up. She'll be back next week to see her smiling face. But today I got Graham Wickham here with President and CEO of Wickham Financial and Insurance Services. He's going to give us some insight on how the investment markets did last week, and we're excited about the information you're going to give to us. Graham, take it away.
Hey, thank you, Jeremy. Yeah, we saw a pretty strong week for the U.S. equities. They posted their second straight week of gains, even though we saw, some strong employment data, and the Fed even raised rates last week, because now we've gotten into that environment where maybe some negative news is now positive news, and the markets are trying to anticipate that. So we've had a very strong start to the year across the indices. If we think about returns, so who did what? We think about the Nasdaq and the Russell, the small cap area was up about 3 to 4%, where we saw the S&P rise about 1.5%. We did see about 8 of the 11 S&P sectors finish in a positive category, even though we did see some slump of about 7% in crude prices. U.S. Treasury yields spiked a good bit off the Fed news. Maybe some anticipation of those really strong payroll numbers that came out. I mean, we saw payroll numbers jump 517,000. I think we were only looking for, at least the estimates were out there, for maybe 187. So came in really strong. So that brought down the unemployment rate from 3.5 to 3.4%. So we're still seeing a strong employment rate in the United States. I think the lowest level since 1969. So the Fed did raise interest rates, as I mentioned, 25 basis points. Maybe the market might use that as a point to maybe pull back or recede some of these big gains if they think the Fed has to be more aggressive. If we look from an international standpoint, we saw the U.S. central banks raise interest rates about 50 basis points, likely due to some numbers, some strong economic data that we had come out there, but still muted a bit. I mean, we saw it come down, the inflation rate come down to about 8.5% year over year, but that did not include some figures from Germany. So that might be a bit higher if we had the German economic numbers in those figures. The Bank of England did signal that it might potentially slow down its rate hiking policy right now, kind of like what the Fed had signaled, but maybe not necessarily a pause. And we did see some strong and improving economic numbers and activity over in China. So I think that's good from a global growth standpoint, at least an economy that is so large that's coming back online since they shut down so violently for COVID-19.
Okay. You were speaking of the employment numbers, Graham. Mm-hmm. With them being so high, do you think the Fed's going to change any of their policies that they had in place?
I don't think they're going to change right now, and I think that's a great question. And that's what the market's trying to figure out, right? How can we have such a good rally if we saw such strong, great economic numbers that might force the Fed's hand to continue to raise rates maybe a bit longer than anticipated, or keep those rates higher for longer anticipated? I don't think it's going to change the tone right now. I think they said, and they were very clear, that they're going to be data dependent. I think that's going to be kind of the case. Now, also very vigilant, as they said, and hawkish towards high inflation. So I think we need some more prints of inflationary numbers to see if they need to be changing their tone, but maybe not quite yet.
Sounds good. Well, thank you so much for the insight, Graham. Also, to our viewers, we got a class coming up here at our office on February the 16th from 6 to 7:30 here at our office. It's on investing basics. So if you, any of your current clients that have any grandkids or kids that they want to invite and they want to bring to us a limited seating for that, so please reach out to our office or go on our website and check that out and let us know if you want to attend that. And also, we got our retirement planning today classes, our next set coming up starting in March on the 7th, which is a Tuesday. So Tuesdays and Saturdays, March the 7th and 14th, and 11th and 18th, coming up here soon. So just check out our website or some of our Facebook posts or whatever, and you can get all more information about that. But With that being said, we appreciate you being here, and we'll talk to you soon.
Take care.